Hi, everybody. August 5th, the Market Update Desk with Scott Riley and Mortgage One. Got a much later update today than what we normally do. We got a lot of customers calling in based on the new rates that are out there. Had a closing earlier today. So, with the end of last week, started this firestorm in the market and the improvement of mortgage rates and the decline in the 10-year bond. Specifically, last week we started out at about 4.25. By the time the end of day Friday was here, we had gotten down to as low as 4.78. Gigantic change. One of only a handful of times I can remember in my career of almost 30 years that we had that big of a decline that quickly. The huge miss on employment numbers between ADP, BLS, and the miss on the JOLTS report, and then the Fed basically coming out and talking about there's going to be a cut in September, started this week that we're having now. Also, last week we had the start of pretty big sell-off in the Mag 7 and in specifically semiconductors. So we've seen a big decline in the Dow and the Nas and the S&P. Starting off this morning, wow! When I started checking on the bonds this morning, it got as low as 3.65 on the 10-year. Then right out of the gates, we got the ISM servicing index, and it showed much more positive than expected. That saw us jump up to about 3.81, and we settled on that throughout most of the day. Where is that showing us where we're going to lead? The discussion today has been the Fed is too late to the party, and we've talked about that before. They generally are too late to the party for raising and lowering. Now there's a firestorm kind of brewing going, does the Fed need to have an emergency meeting and lower rates right now before their meeting in September? So there's a lot going on behind the scenes, and there's some political overtures within those comments. We also continued this very significant tech sell-off. In fact, if you've been following Intel, that's down almost 40% in the last week and a half. So we continued the day down on the stock market. We ended up fairly neutral at the end of the day for mortgage-backed securities and 10-year bonds. Little quieter week this week. We get unemployment claims on Thursday, get a couple different bond auctions. Those bond auctions might be received fairly well if investors are thinking they've got to grab longer term solid yields right now before any decrease from the Fed. Might get some good action on those bonds. Let's follow this commentary. Got a lot of Fed speakers also this week. Bottom line, if you're a buyer, you need to be out immediately looking at houses. By the time other people really understand where rates are, you're going to have too much competition. Seize the moment right now. Also, people refinancing. I'm working on a bunch of them right now. Give me a call. I can run some numbers. Not only can you lower your interest rate, you might be able to lower your PMI. Maybe you'll be able to drop PMI, change from FHA to conventional. Let's run all these numbers and let us help you analyze where you are and where you could be. Give us a call. We'll keep on top of everything this week. Follow us on the socials, 616-293-2189. Hope you have a great afternoon.